What is going on, everyone? Welcome back to our channel. Trendline Forex here. We've got the second live session starting right now, the second one for this week. Obviously, we had a couple of sessions in the previous weeks as well. If you haven't joined already, make sure to do so. So all you got to do is obviously just to subscribe to our channel. So before I proceed, I'll just quickly check the audio just to make sure that we can actually hear clearly, because I ain't got nobody telling me usually, so I've got to do it myself, you know. So if you want to help me, just drop a message in the chat box. Let me know if you can actually hear me well. Just drop a message in the chat box. Yeah, I think everything's good. So what we're gonna do today is obviously we're gonna check out the setups, okay? And I'm talking about the major instruments, mainly euro, dollar, pound, dollar. We're gonna have a look at gold. I know most of you guys trade gold. Um, oh, that's great, thank you. Um, so we're gonna have a look at gold as well. We do have some setups forming up on the yen cross pairs also. Now, to be honest with you, I think it's probably early for entries, and we may get the entries on the yen cross pairs first, but it really depends on what kind of instruments you usually trade. Because if you're focusing on the majors, then you shouldn't switch over to a cross pair just because there may be an entry earlier. All right, you stick to what you do best. So for myself personally, I would say that's the majors, not the cross pairs. But I'm looking at the yen cross pairs, and I can see that we've got some decent pullbacks already, which we don't yet have on euro dollar and pound dollar. So what I'm gonna do right now is just drop a quick message in the free Telegram channel, and then we're gonna proceed. Also on Facebook as well, guys. Make sure to check out the links in the description below this video. If you're watching this live, just check out the description down below. And make sure to follow us on social media. Also join the free Telegram channel. Anything that we do, I'm talking about new updates regarding courses, mentorship, giveaways, promotions, stuff like that. Everything is shared in the free Telegram channel. We've got over 3,000 people that have joined. So that's where we also share daily updates on euro dollar. Right. So let me stop Rumble for a second. I'm just gonna quickly share the link for the free live session, so more people can hopefully join, and then we'll proceed. Whatever kind of questions you guys have, you can put them in the comment section down below, or if you currently have any other setups. I'm talking about Forex setups mainly, all right? So I'm not gonna go through, indices and stuff like that. I do not trade these instruments, nor any other metals different to gold. Gold is the only commodity that I trade, right? Okay, so we've got the message sent in the free Telegram. Proceed forward and do the same for Facebook and X as well. Um, and then we'll come back to the charts very quickly. And for those of you out there using the Volatility Expert Advisor, right now may be a good moment to start loading up on some positions, because we are expecting to see some pullbacks here on the major instruments, okay? Or maybe not start the robot right away, but maybe just adjust your zones if you have any, or basically the area where you're going to start loading up some buy positions, okay? Because short term, I'm still expecting that we may see another push to the upside, and then maybe we're going to have a potential pullback. So we'll see how that goes. and I do like to trade pound dollar the most. So this is what I'm personally looking at most of the time. So ideally, I would love to see the pound regaining control over, because it's usually the pound I've noticed that is stronger than the euro. But recently we've had price action that shows us the, the opposite type of trades, and so I really wanted to see the momentum coming back to the British pound, and then I can switch over and start looking for buying opportunities in pound dollar. This is what I would prefer to do, but at the end of the day, we trade what we see, not what we think is going to happen. So this is something very important to keep in mind every time you're looking for trades. Right. Okay, I think we're pretty much ready to go. You guys that are watching, do you currently have any trades, or are you looking for entries on any of the instruments I've mentioned? Euro dollar, pound dollar, yen cross pairs, gold, anything else? Dollar yen is actually moving pretty well as well. I was expecting to see a bearish move, and this is what we currently have. We may switch over to dollar yen just to check it out, see how it's going, because last time I checked out dollar yen was early in the morning. I haven't really seen what um, it's currently doing, but I'm observing price action on the majors. All right, so let's have a look at current situation. Okay, so obviously I'm always looking at the higher time frames. This is what I need in order to start building on my plan, and I would definitely need to see the bigger picture, and the only way we can do that is to actually look at the time frames above the hourly chart, not even the 1 hour time frame, you see. So anyways, we've got this high up here. Now, how do we know whether there's going to be another continuation to the upsides, maybe then a retest of the highs and then a retracement, or is this going to be the beginning of the retracement? So to find that out, I think we will need to see some strong momentum coming into the downside, because that would mean, okay, that we are reacting at those levels and there are orders, sell orders that are being filled up here. The only way we can do that, we can spot this is by looking for, momentum. So when I'm talking about momentum, obviously something like this, not exactly like it, because that was due to economical news. Okay, so I'm looking at current price action. For now, I don't see that. I can see that price is slowly pushing down, almost as if it's struggling to go down. So that makes me think there is still a high chance that we can actually see price break it above this high and maybe then give us that reversal. Okay, so once we have the reversal, we would need to see a shift in market structure. So I'm talking about consecutive lower highs and lower lows, and then you can drop down to a lower time frame, potentially look for, if you want to go against the trend, then in that case you would be looking to start taking sell positions. Now, if you look at the 15-minute time frame, this is why it's so confusing when you're not looking at the higher time frames. It already seems like we are reversing and we're actually creating consecutive lower highs and lower lows. But the thing is, if you look at the 4 hour time frame, that's pretty much nothing. It's just a single bearish candle. That doesn't really tell us much. The only thing it tells us is that we're currently testing the previous highs. Okay, so that could easily be a break and retest setup for a potential continuation to the upside. Now, if that happens, then I'm going to be looking at the levels up here. I'm talking around 1.1760 roughly. Okay, so for now, I still think there is a chance that we could come a little bit higher, and this is where I'm expecting that we're going to have these pending orders, which are potentially going to send price to the downside. And I'm not talking about full trend reversal. Of course, I'm only talking about a little bit of a pullback. Okay, so this is why right now I don't think it's the best time to and even if you want to go against the trend, it's not the best time to enter a short position either. Okay, so long positions, why not? Well, because we've got massive resistance up here. So if we're going to be entering a long position, where do we place our stop loss but still have positive risk to reward ratio, if that makes sense, right? So if I'm going to place my stop loss right here, this is very, very aggressive. It doesn't really fit my trading plan. If I decide to place my stop loss down here, well, then I don't have a positive risk to reward ratio, because this is how much of a stop loss I would have for a potential profit of about that much. Okay, so obviously this is not looking good to me. So that's why I do not want to take any buy trades. Now, even if I decide to go against the trend, I don't yet have a confirmation that we've got a reversal yet. Okay, like I said, for now we just have a single bearish candle sending price down to previous structure. So we can easily see a push off of that level, off of current levels, 1.1660. Let's say, let's put it that way. So that's why I would skip euro dollar for now. But when it comes to setups, like an overall setup that we have, I would say it's a very, very good setup, because we're either going to reverse the current price levels, okay, and if we do that, then I'm going to be looking at previous levels where I could potentially look for the next reaction. Okay, so the next level would be 1.16. Now, if I see a market shift down here at 1.16, this is where I'm going to be looking to position myself long. Okay, so I think we need a bit more patience here with euro dollar specifically, of course with pound dollar as well. But if you currently have any long positions, it depends. If you're going for a long-term trade and you've got your stop loss all the way down here and you're looking for the whole trend to continue, and you're expecting to grab, let's say, anything over, of course, 50 pips or something like this, then I would say leave your trades open, because whatever kind of pullback we have here, I'm not really expecting this pullback to break below this impulse candle. If it does, it's not going to look good, right? And overall, we are expecting a bullish continuation. So anyways, how do we find the pullback level? Well, one thing that we can do is we can use the Fibonacci retracement level tool. Okay, so if the pullback actually occurs at current price levels, then that means we've got a fixed high up here at the level of 1.1730. Okay, so in that case, the 38.2 is coming down to this previous low, which is exactly 1.16, like I said earlier. So that's why I think this level makes a lot of sense as a potential pullback level. This is where I'm going to be looking for a reversal. Of course, I'm not going to be using pending orders. I'm talking about waiting, looking at price action, observing price, how it reacts around that level, and if it gives us our entry pattern, whatever kind of entry pattern you use, well, then this is when we execute a long trade. Otherwise, we're not doing anything. Okay, now this whole setup is so much easier to trade with the Volatility Expert Advisor, but right now we're not talking about this. We're talking about manual trading. So this is what I would do. And if you are expecting, just like I am, that even short term, even just a few pips to the upside, we still have some room to move towards the upside. And if you want to try and get into that move, then you can drop down to a lower time frame and potentially look for that reversal. Now if we drop down to the 5-minute time frame, even though we're still bearish, right, it looks like this piece of price action right here looks like a possible reversal to me. So even right here on the 5-minute time frame, you can find a really good setup at the moment as we speak. I don't want to give you a trading signal or anything like this, so do not take it as one, but it looks like we've got this V pattern reversal. We then have breakout above previous structure. Let me just delete some of those drawings. We've got the V pattern, we've got the breakout, we've got the retest, and then we have another momentum candle. So it looks like we may be pushing back to the upside, okay, to complete this move on the 1 hour time frame, which I'm expecting to potentially reach around 1.1740, 1760, something like this, pretty much the area of the previous high, because this is where we've got the beginning of the bearish momentum up here at the level of 1.1760. So if we're going to be looking for that level as our target, then we've got around 70 pips to the upside. Now, if you manage to grab a really precise entry, that means you're going to have, either a stop loss of about 14 pips or a stop loss of about 30 pips. Both case scenarios, you've got a very good positive risk to reward ratio. Do I recommend this trade? I can't say no, or I can't even say yes, because it really depends on your trading plan. If you're trying to get in and out of the market quickly, if you consider yourself a day trader, or this is what you're focusing on, then that would be a very decent setup, okay? But if you are looking for kind of a more laid back trading style of trading, and not really managing your trades that actively, not really staying in front of the charts for a long period of time, then this is not a good idea for you. All right, so hopefully that gives you an answer. So overall, even though I don't currently have an entry on euro dollar, or a setup where I can make an entry, I still consider this as a very good price action that we currently have on euro dollar. Then we move on to pound dollar. Okay, 4-hour time frame, we've got this same V pattern reversal, but this time on the 4-hour chart, not the 5-minute chart. So this is a much stronger signal for a continuation to the upside, because it's already confirmed by the higher time frame. So where do we enter a trade? Now, even if we know that the market will continue trading higher, we do not want to enter at the highest price, right? We're looking to buy, so we obviously would need a cheaper price, because currently we are at the highest price of this move. So we're not going to enter a long trade up here. In this case, we would need to see some sort of a pullback and then a reversal that would confirm again our idea, and it will actually provide us the entry we're looking for. Now, we don't yet have a fixed high, and what I'm talking about that we don't even have the beginning of a correction here. So we don't know whether the market will do that, or in fact it will continue higher. So we don't even know if this is the high. But we are trading at previous major 4-hour high, so I feel like we may see some sort of a reaction here, which means if we do, again, we're going to be using the Fibonacci retracement tool. Right now, as it stands at at the moment I'm speaking, we've got this high and we've got the Fibonacci right here with the B point at 1.3595. So that means the 38.2 is coming down to around 1.3420 roughly. All right, this is not a fixed level. I'm just saying, if there is a correction that begins right now, these are the levels that we're going to be looking at. Again, perfect retest is what I'm expecting to see here on pound dollar as well. So as you can see, very similar setup to what we have on euro dollar at the same time. It's looking good, definitely looking good. Now, if you're going to be entering a trade on euro dollar, I would suggest do not enter a trade on pound dollar at the same time, because you're, essentially doubling your risk on the same trade. Okay, these two, they have positive correlation. If one of those instruments starts trending higher, well, then we're most likely going to see the same thing on the other instruments, at least most of the time. Now, for those of you trading against the trend and looking to get in and out of the market, you may have a decent opportunity here. And what would that be? Well, down to the 5 to 15 minute time frame, let's say we're looking at this support, price breaks below that, we can then use the Fibonacci expansion, and this is going to give us the next target levels down here. So on the next lower high, we can actually look for entries and target the first or the second target from the Fibonacci expansion. What am I talking about? Well, let's say that we have a breakout below this support, price breaks below that. Oops, let me just do that again. Price breaks below this support, comes back to the upside for a retest, and then it's about to continue lower. In this case, what we can do is we can take the Fibonacci expansion tool, okay, place it on point A, B, and C, which is the end of the pullback within this move right here. And then our first target is going to be 1.3530. and then 1.3510. Now let's see whether one of those levels fits our market structure. Okay, so 1.3510 fits this previous high right here. But as you can see, the 38.2 is quite far. Okay, so if we reach the 38.2, we can actually look for targets down here as well. Now, of course, we wouldn't be able to know whether price will continue all the way down to 38.2, but as we are observing price action, if there is a signal for a downside continuation, meaning that price is gaining momentum to the downside, that most likely means we're, bound to reach the 38.2 next, which means you can then possibly extend your targets if you've made your entries already down to 1.3480, which is our third target from the Fibonacci expansion. Okay, so this is a setup on the lower time frame and it's against the main trend, so you've got to decide very well for yourself whether you would like to take a setup like this. Me, for example, if I'm going to be doing something like this, then it will have to be on a separate account, which is for more aggressive style of trading. But on my main account, where I'm taking more of a conservative trades, I wouldn't take a trade like this. I know those types of trades, they carry more risk than the ones that I'm usually looking for. So that's why I wouldn't want to mix them up with my, kind of higher probability trades, if you know what I mean. So these are pretty much the setups that we have on euro dollar and pound dollar. Okay, now in those live sessions, I'm not usually going to give you the entry, even if I have an entry, because I don't want to give out signals. This is not really going to teach you how to trade, but I believe that by laying out my trading plan in front of you like this must be helpful, right? Because even if you decide to not pursue any of those setups and trade any of those setups, at least you develop your kind of critical thinking when it comes to trading, and you're exploring different points of views and different ways of trading, different styles of trades and stuff like that. So hopefully that helps out, because that's why I'm doing it. As you can see, these live sessions are completely free. Everybody can join, and they're more focused towards people that are still struggling with manual trading, whether they don't have a good enough strategy, they don't trust their strategy. That's a big issue as well, because a lot of people, if you ask them, a lot of traders, they would say that they have a strategy, but they don't really have a specific plan, a strict set of rules. Everybody knows that, okay, if I see a higher high and a higher low, I'm going to be looking for entries on the creation of the higher low or whatever it may be, but they don't really have a strict set of rules. Okay, so let's say I need to see price testing this level. Once it tests it, I then want to see this specific candlestick pattern, and if I see that, then I'm going to enter with a stop loss below here, and my target is going to be here. And if price goes in my favor but it then does this, then I'm going to react this way. You see, there are many ways that you can go when you start developing your trading plan, and there is no other way to do it. If you want to really see some profits from trading, do that. You'll thank me later, or in the next live session, right? So anyways, euro dollar and pound dollar are currently looking very, very well. I would say, even though I don't have the entries right now. See, that makes me exciting, having such a good setups. And even if it's not time to open a position, that makes me excited, because I can't wait to come back to the computer, let's say in the morning, the next day in the morning, because I know that this setup must have developed to some point where I can see some progress, I can see the setup developing, and I know that the levels at which I'm looking for entries are kind of approaching. So this is what I like about trading. This is what makes it really exciting for me. And then we have gold. Okay, in the beginning of the session, I did say that most of you guys trade gold. Okay, because I talk with a lot of people. I would say maybe 70-80% of those people are focusing on gold. Even with small accounts, they don't even consider the risk or calculating lot sizes and stuff like that. All they know is that there are enough moves to make profit on gold every single day, so that's why they focus on this instrument. But you've got to understand, price action with gold sometimes may be very tricky. So I believe we've got one of those situations right now, and I'll tell you why. So I've got the area where I was potentially looking for, a reversal, and so far this is kind of confirming. Okay, so we've got price action trading sideways within our area for a bit. We then have the breakout, we've got the pullback, and now we have a really nice candlestick pattern right here, and this is the 1 hour time frame. Okay, so this is a little bit more trustworthy compared to, let's say, the 5 minute time frame. Now the thing is, this is what we talk in the what we talk about in the premium Telegram channel. So I'm going to share with you some secrets from the kitchen, right? Is that how you call it? I think so. Anyways, we're looking at this sideways move here, and it's been going on for some time already. Okay, so we've got the resistance up here, we've got the support down here, another support level down here, and we've got the major low at 3,120, currently trading at the levels of 3,350, 55. So what I think is going to happen is maybe we're going to continue short term sideways, but then eventually I'm going to be looking for this next bullish leg, because I want to participate in that bullish move, where I'm going to be expecting for price to break above the resistance already. Now the thing is, how many times are we going to bounce off support, then reject resistance, go back down to support and stuff like that? We can never know. But the thing is, I'm always looking for where the market is looking to trap retail traders. The thing is, it looks like we're looking at a reversal. So I believe a lot of people are going to be looking for long positions at current price levels, or they've already started loading up their long positions. Okay, so how can those traders be potentially trapped so the market can take them out and then gather all of that liquidity and continue to the upside? Well, I think that could happen if we take out these lows and then reverse. Before that, though, we may also take out the highs just to get even more traders into that trap, because there are some traders which are hesitant to enter a long trade right now. So instead of that, they would say, okay, I'm going to wait for price to break above this high, then I'm going to be looking for either a break and retest setup or whatever it may be. But if those traders have not entered anywhere here, they're looking for a breakout. So what will happen if the market breaks above that, but it then reverses, breaks below the lows, and it then gives us the entry? Well, by that time, we would have taken out a lot of retail traders, okay, both buyers and even sellers. So instead of that, I would love to wait and see whether price will do something like this. Now, if you still want to enter a long trade because you are expecting that we may start this move, which of course could happen, it's not impossible. And if you want to take a trade right now, I would say use a smaller lot size. You're always going to have enough opportunities to add more volume to your position. But if you add all of that volume on your entry, on your first initial entry, then you're going to have to take out a part of your position every time price goes against you. So you're basically going to be closing losses. Okay. So anyways, if you want to take a buy trade here, okay, just observe price action. As soon as it breaks above this high, you want to be looking for signals in the opposite directions. If you get some rejection signals, okay, a price closing with a bearish candle, this is not going to be ideal for an upside continuation. So in that case, I would usually close my trade, whether I'm in profit, in a loss, break even, doesn't really matter. Like I said, I'm looking to trade whatever the market gives me. Okay, I'm not looking to trade whatever I'm expecting to see, because overall I expect that we're going to see a bullish continuation. So if it's so easy, I would enter a long position here, not even place a stop loss, and then just expect for the market to eventually go up. Okay, and if you want to do that, then you're going to need quite a large account. And if you don't have that, then you're going to have to manage your positions accordingly, and more often as well, even if you're using the volatility expert advisor. So anyways, this area is still of a very big interest to me. I'm looking for price to potentially take out the highs, then come back, give us a retest of the support, or maybe take out that support by a little bit, and then we're going to be looking for a reversal signal here as well. So together with euro dollar and pound dollar, I believe we have gold as a potential entry pretty soon. Not today, but pretty soon. I think we do have some more news until the end of the week, which means tomorrow, maybe even today. I need to check out the FX calendar, but you know, so far so good, I would say. Even though we don't have the entries yet, it looks like we've got the setups forming up pretty nicely. What else do I like about this setup? I like the rejection down here, and then we have another one. Now if we don't break below and close below this week, if instead of that we start pushing up and we close above this previous candle or even above this previous candle, closing anywhere up here, well then this is going to be enough of confirmation that we can start looking for buying opportunities and not wait for another pullback potentially. Of course, we'll have to see how this setup develops, and of course I'm covering all of that in the premium Telegram channel, you know, every single day from Monday to Friday. So if you decide to join, you're never going to miss any of those trades, and you're always going to be aware, you know, as to in what direction a market is moving on a specific instrument, what are the key levels, and ideas like this that you need to keep in mind every time you're taking a trade. Okay. So if you decide to enter right here, like I said, definitely use a smaller lot size. And then if you get taken out and then you get another confirmation, that means you have to take that trade again, of course, if it is based on your strategy. Okay, so watch out for some candlestick patterns here as price is pushing up, and let's see whether we're gonna have something going on, something happening until the end of the week. Right, we then have the yen cross pairs. Okay, so I did say in the beginning that the yen cross pairs are currently looking very good when it comes to setups, entry setups right now. This is euro yen, and here is pound yen. In fact, this is the daily time frame. Let's hop down to the 1 hour chart. Here we have this pullback, price currently trading around 198.90. So let's see how it goes. We can either continue to the downside, which if that happens, then we're going to be looking for the next Fibonacci level. But if we drop down to the 15-minute chart, we may also see something like this. And if we do, then you know we can potentially look for entries on that instrument. So pound yen is looking pretty decent, and here is euro yen as well. Okay, with quite a stronger correction, I would say. You know, this is what I'm saying. We may be going back to normal, you know, trading environment, because it's usually the euro dollar that falls short of the pound dollar. Even if they're both moving sideways or bullish or bearish, you will usually see that the pound dollar is making bigger moves. So I think that you know applies to euro yen and pound yen. Okay, so here is euro yen, the pullback, quite a strong pullback, and not that much of a pullback on pound yen. So what I'm going to do right now is I'm going to use the Fibonacci retracement tool from point A up here to point B. The 38.2 level is the, did I say 38? The 198.30 level is down here at the 38.2. This is where we could potentially see price kind of giving us that reversal. Okay, so within a move like this, if of course we have one of those moves, the expert advisor will be performing very well. In fact, better than the way you would perform, right? Because you will have to deal with emotions, right? Everybody's got their jobs and you know duties outside of trading, so you may have to go outside for a bit and then miss a setup like this. Whereas when you use the volatility expert advisor, you just set it up, you leave it as it is. You got to make sure that your computer is on, and if you cannot keep your computer on all the time, then you can just sign up for you know, a VPS system, a virtual server, which will grant you access to the market 24/7 or 24/5, depending on you know what instruments you're trading. But this is pretty much the idea on the yen cross pairs. Here is euro yen. Let's just check out, see how many pips. So we're talking about 180 pips, and this is from 15th uh, 15th of August. What? I must have got it wrong right here. I'm not sure, but you know, in a matter of literally about a day, because each one of those candles takes 4 hours to complete. We've got 12 hours right here. Before that, we've got several more hours. In about a couple of days, we've got 180 pip of a drop here on euro yen. Okay, pound yen, not that much. Like I said, 140, not that far either, to be honest with you. So these are pretty much the setups. You guys let me know, what do you think? Do you like those setups? Are you going to be trading any of those setups, or do you have your own? And do you actually even trade those instruments? I know a lot of people focusing on one instrument only, and I think that's a great idea. I really don't trade more than two instruments. It's mainly pound, dollar, and gold. But it really depends. Sometimes we may have a good setup on a different pair than those, and I would probably take the trade if it aligns with my plan perfectly. Even though that should be considered in your trading plan as well. Which instruments you trade, when do you trade them, and when do you not trade them? uh, in FX, GU, and AU. Yeah, Aussie dollar is also um, looking like a good setup. I think it usually takes a little bit longer for Aussie dollar to, kind of create the same move that in the meantime Euro dollar and pound dollar would already have completed. But AU is a solid pair as well. Trying to stick to the majors. Euro dollar, the major, of course. Sure. Euro dollar is pretty decent. Uh, I never traded it before when I first started trading, but then I kind of found out that it's a very common instrument, probably the most traded one in Forex. So I've decided to go for it as well, and also include it in the. But I would usually prefer pound dollar over euro dollar. Really depends on current market conditions. But yeah, euro dollar definitely. A nice reaction down here. All right, some positive news for the US dollar. That's right, yeah, PPI and jobless claims, yep. I think we also have some news tomorrow, right? Retail sales for the US dollar. Um, oh my god, Trump put to me, I completely forgot about that. We'll see. Tomorrow is going to be interesting. I'm going to make sure to follow. Where do you guys follow news like this to stay up to date with what's going on? I'm talking about like meetings and briefings and stuff like that. I usually use Twitter or X, and tomorrow I'm going to make sure that during this time I'm going to be looking at because I'm not going to sit down and watch the whole meeting, of course. Um, it's probably going to be broadcasted. I may turn on CNN actually. I'm not sure, but you know, I think we may actually see something going on tomorrow during that meeting. It really depends on. This is going to be major. This is going to be epic. I do like Trump as a character. I mean, the way he speaks sometimes is like Watch, so you watch Bloomberg TV all the time besides the weekends. Yeah, that's right. I used to watch it even during the live sessions. When I first started with those live sessions, I always had it up and running, but I wasn't sure whether it's not interfering with my audio. So I decided to, switch off the TV while I'm doing the live sessions. But I just feel like Twitter is they've got such a quick kind of flow for whatever you got, like breaking news or emergency news or something like this. I always find out on Twitter first, but that's probably because I'm not constantly watching Bloomberg or CNN. Forex Factory uh, news. Yeah, Forex Factory, FX Trade, Investing.com. It's pretty much all the same, isn't it? So let's see how the hourly candle will close. But if it closes with a rejection like this, we may see in the beginning of the very next candle, we may see a little bit of a push to the downside and then maybe a reversal right here, which obviously I'm not going to be trading on the higher time frames, but this could be traded on a lower time frame. Uh, you know, obviously we need to make sure that there is no close below the wick down here, because if there is, then we're probably going to see lower levels later on. Right, some decent price action here on the yen cross pairs. It will be important to see how the daily candle will close, because if today's daily candle closed with a big wick, rejection wick, then we're most likely going to see a continuation to the upside later on. But I wouldn't be looking to take a sell trade here on any of those instruments, you know. Again, another rejection off of the support down here on gold. Pound dollar with a really nice rejection as well. Closing above the support. Potentially, we'll see, but you know, this less than a minute until this 15-minute candle close. Just have a look at the 15-minute candle. Some strong rejections to the downside. You know, just in this 15-minute candle here on gold, we have a what is it, like $10 move, 3,353 down to 3,342, 10 $11 move. Now, those of you using the volatility expert advisor, if you set it up to enter every trade on every $1 move and exit it on every $2 move, you know, you've already made profit just because of this single candle alone. Because on every $1 move to the downside, you open a long position, and each one of those trades has a $2 take profit. So you manage to enter and load some buy positions within this rejection wick right here, and price is now trading higher. So it already managed to get out of those trades, generating you profit. See, this is something you can't really do, or it's very difficult to do if you are trading manually, because it's a lot of stress. And you know, the only way that you can actually make money with a candle like this is to open a trade all the way down here. Okay, Now, even if you open in the middle, of course, you're going to be in a drawdown for a little bit, and then price will eventually come back. But all of that is extra stress and pressure that you shouldn't take as a trader. Okay, this is what the volatility expert advisor shows as an issue for all of the traders. And for those of you who don't know what I'm on about, you need to check out our website trendlineforex.com right here, and then click on that volatility trading button up here, and then you can read more about this. We've also got a completely free full course on how to use the volatility expert advisor. It's a completely free. All you got to do is to sign up on our website, okay, and then you're gonna get access to the course for that expert advisor to see how it works and learn more about it and how you can use it with your strategy, because it's a tool that allows you to be very flexible with your trading. It doesn't really matter what kind of strategy you have or what kind of trading style you're going for. You can use the volatility expert advisor to save you time, number one, and also to improve your accuracy, right, or increase your win rate, so to speak. But yeah, anyways. So this is what I'm talking about. After a rejection like this, most of the time you will see price trying to continue pushing down. The only question is it going to be able to close below this rejection wick, or is it going to leave another rejection wick? Okay, because if it does, then it's very likely that we may see a push to the upside. And of course, again, gotta say that all the time, do not take this as a trading signal. All right, I'm just thinking out loud, just sharing with you my opinion. As you can see, I'm not taking any trades right now. It's because I have much better setups on the higher time frames. You know, that's why I'm not even tempted to take a trade on the lower time frame. And everybody should be like this. You know, you've got to develop that skill to know where to sit on your hands. I mean, when to sit on your hands and when you should execute trades. Fairly strong bearish candle on a 5 minute time frame. It doesn't really mean nothing. We are still trading within the candle of the news. Okay. Let me check out the dollar yen. Here we have a perfect break and retest setup. And also, as we're retesting, we're also forming a rejection. So I feel like this is a really decent setup for a downside continuation. Okay, so keep that in mind. Watch out for dollar yen. Nice one. A close above this level would probably set up gold for another bullish run. We don't yet have that, but watch out for price closing above this structure right here. those are a must watch. Probably the most valuable skill in trading arena, to know when not to do anything. Yeah, of course. Of course, this is very, very important. Sometimes, people have issues with, not that they're not able to make money, to find profitable trades, but they're not able to sit on their hands when they're not supposed to trade. So they give all the profit back to the market. I've seen this many, many times. It has happened to me many, many times. I still make mistakes sometimes, and I believe everybody does. We're humans, so no matter how much experience you have, you know, uh, sometimes you enter those trades that you're not supposed to. But it's fine. As long as you recognize that you're either over trading or over leveraging or whatever it may be, then that's fine. At least you know what you need to work on. But if you are over trading and you think everything is fine, and you're taking just enough trades and stuff like that, then this is an issue. A lot of people struggle to not enter a single trade for several days. But that's the thing. If you're not a day trader, now if you're a day trader, you would naturally have more trades, of course, and more losses. But for me personally, it doesn't work, because having a streak of losses really affects my mindset. So it gets even more difficult for me to start entering trades after I have a losing streak. So that's why I kind of gave up day trading, and I'm looking and focusing on the higher time frames now. It's because I want to have a higher win rate, and that immediately changed my trading. I now have higher win rate, but it means I have to take less trades, and I'm completely fine with that, because I know what works for me and what doesn't work for me. I've tried it. Everybody needs to try. If you don't have a lot of experience in trading, then I think you should go through lower time frames and higher time frames. But this is what I suggest to most of the people, especially beginners. Just focus on the higher time frames. And no, almost nobody listens to me. They always are tempted to go down a time frame just to find an entry so they can enter a trade right now, and I understand that. But the quicker you learn and accept the fact that you should take less trades, the quicker you're going to turn your trading around, and have more profitable trades and less losses. uh, Till I got to that point, I was basically making money and give it all back to the market, which at the end of the day, when you're break even, it's what was all of that stress? What was it all about? All the stress you went through, it's just not worth it. And you keep doing that year over year over year, and then you're like, all right, I'm done with this. I need to change something. So anyways, I'm gonna end the session right here, guys. You make sure to check out all the links in the description below this video. Have a look at our website, trendlineforex.com. Learn more about the volatility trading. This is definitely going to help with your win rate, since we're talking about this. Subscribe to this channel. I'm going to be doing more live sessions. There's going to be more content coming out. I've been saying this. I really need to sit down and actually do and record some content for this YouTube channel. But I am quite busy with all the people that are using the Volatility Expert Advisor. Right now, we've got about around 170 people using the VTS. We've got another YouTube channel where we share results and stuff like that. I've also shared results on live accounts here on this channel as well. So if you haven't seen them, make sure to have a look at them. My most recent videos, I'm not talking about the live sessions, but the videos in the main channel. And you can learn more about this too. That's pretty much all. I'll see you guys in the next live session. Thanks everyone who joined. Thank you guys for commenting as well. Wish you all the best. Be patient, be smart, find the best setups only, and only trade those setups. Do not settle for anything less than a good A+ setup. And if you don't have one, if you don't know how to find one, well, then you probably need to get educated on that topic. Maybe go through a course, a mentorship program. Like I said, everything is on our website, or you can chat directly with us at Trendline Forex. You can send us a message on any of our channels, whether it's social media, Telegram, email, whatever it is. Get in touch if you want to learn how to trade. We're more than happy to help you. I'll see you guys in the next one.